Good morning, everybody. Welcome back to Schwab Coaching for the Thursday edition of Trader Talk in today's market. I'm your host, Kevin Horner. A beautiful morning here in Denver, Colorado. Very common, of course, in April. Nonetheless, equally common, I expect some snow and storms this upcoming Easter weekend. Should be pretty typical Colorado weather weekend. Thanks to all of you for being here, though, this morning, everybody. We're going to get down to business looking at a boatload of charts. We're going to talk about some individual stocks in the news today. We had a bit of a sell-off there yesterday afternoon, as we heard from Fed Chair Powell. We're going to look at some of the levels that were hit and achieved in intraday price action and talk a little bit about that as it relates to the broader indices, of course. So plenty to get to with all of you. Today, I'm joined by my friend, fellow coach, Barb Armstrong in the chat. You can say hi to Barb. She'll, of course, get to questions that I'm unable to get to during this 45 minutes or so. So feel free to post in there for the duration of the show. We go about 45 minutes in total. If you're not already doing so, follow Barb and me on X at Kevin Horner CS, at Barb Armstrong CS. We try to post for you there throughout the week, highlighting some intriguing or interesting charts, perhaps. Maybe from Barb's standpoint, you're always going to get some positivity. That much is true. You're absolutely going to get some reminders of some things that we can do from our own mental makeup side of things. How can we position ourselves mentally to attack each and every day? I love following Barb for that, one of those reasons. That's absolutely great. So with that, everybody, let's get into it. Let's take a look at our disclosures briefly, and then we'll hit up a bunch of charts. So please remember, our conversation is exclusively for your information and your education. We are not in the habit or business of making recommendations here. We do not endorse a particular approach or strategy to trading the market. We do talk technical analysis, though, here, covering some of the concepts, some of the strategies, ideas that traders may choose to employ. But remember, technical analysis is just a piece of the puzzle. We do not encourage you to base your decisions exclusively off technical analysis. Additionally, it's important to remember, I'm not sure how this is going to work out today necessarily, but we might discuss some options. We might look at an option trade as we get into some of these underlying equities and some of the news there. If we do that, it's very important to remember, though, that as it relates to options, that's a different approach, of course. Options are not appropriate for all investors. Absolutely something you can do some work on, pre-work, which is what we would encourage, of course. You want to be familiar with the characteristics and risks of standardized options before considering any option trade. Remember, you do need to be approved on each individual account at Schwab in which you would like to trade options. So please make sure you're working through all the requisite steps there. As far as our agenda, it's going to be more of the same, but I'll just make a brief abbreviation of that. Major indices, yes. Sectors and industry groups, yes. But individual stocks is what we're going to spend a little bit more time on than we usually will. So on a day like today, where it's just me running solo, it'll give me the opportunity to look at a bunch of those individual stock charts. And maybe we have an opportunity to set up an example trade for you all to get some further discussion and context going. So with that, let's get to what we're all here for. Let's talk about what's going on with the S&P 500 here. So I'll bring that up. Now, I got a lot of lines drawn in here, everybody. These lines are very much, they've been in play for a while because we continue to stay within these lines. And so drawing these lines and having an understanding of what they reflect and represent for us, as you look at something like this daily chart right now, we're looking at what is only the last year or so. In fact, I could back this off. So we are seeing the full year. And then just pointing out a couple of things. We've got this red downtrend line that remains in place. We know that remains in place because we've not traded above it, right? And instances in which we've traded above it have been very short-lived. Intraday through it, running into it at a close, and then the following day opening lower but not getting back above it. So what do we have? More of the same. Lower highs and lower lows. Now, from the trend standpoint, the fact that we rallied back into resistance zone, the 20-day moving average in orange, the downtrend line, we have made, yet again, a lower high in price. And thus, expectation, what I should not say is expectation, but rather probability favors a revisit of the level we tested at our ultimate low in this drawdown here, 48.35. Now, doesn't mean we have to get there, but what we always discuss, as you all know, many of you are frequent attendees here, you know that we talk probabilities as a means of setting up and building our trades. So what is it about the action of the last 2 days in particular that might give the bears a bit more confidence here? The first thing likely is the fact that we took out the low from our rally. So yes, we have a huge candle day, but I'm choosing, just from the standpoint of creating our high day, our high trade day. Technically, the high trade was this one right here, right? But this was such a massive candle that the low of the day we made our high is all the way down here at around 49.50. Now, it's true, many a trader will tell you under 49.50 that there's going to be bearish action, or at least the opportunity to see that 48.35 revisited. But from the standpoint of considering where do we believe, or where would a trader look at and say, hey, we've made a big, strong push off of our low to this peak here and have then traded, by the way, about 13% up, then traded below the low of our high day, the highest trade we put up in the rally. Well, that really got taken out with yesterday's price action, right? In fact, yesterday's highs were through that level a little bit, but incapable of closing above that level. So that may give bears a little bit of instruction here, right? So could a bearish SPX trader consider putting on a bearish position here at this point? They have the opportunity to do so. The instance where that changes, of course, remains the same. Can we get a higher high out of the SPX? Still haven't done it. So as you can see, everybody, 5,500 here is a very important level. It would mean that we would have traded to a higher high in the short run. It could mean a continuation. It could mean a break of the downtrend line. All of those things would have to occur to change the current bearish bias as it relates to the SPX. I think that's where we stand right now. So yesterday's action was intriguing to me as well. We're going to look at the 5-minute bars here. All of the lines I've drawn in remain held here, everybody. So as you know, when we move into these speedier time frames, we can get a little bit of clarity on things. The thing that stands out more than anything is still that we have not made higher highs. Every time we have pushed into a zone that was the prior high, we have lost our mojo, lost our momentum, stopped the buying. So that stands out. Yesterday's action, as you can see all day Wednesday here, we were okay until midday when Fed Chair Powell started speaking. And what we heard from him was more of the same in terms of concerns around the tariffs and what that could mean for our growth going forward, and further stating that he wasn't prepared to act imminently from a standpoint of the Fed doing something relative to rates. In fact, he stated that, looking for my actual quote here, he basically put he said that, yeah, we're, the hopes that the FOMC might come into the rescue here, cut rates on an emergency basis. That's basically, there is no likelihood of that, he said. What he actually said was, somebody questioned specifically, is there a Fed put underneath us here? Is there some sort of protective measure that investors and traders can take from the Fed? And ultimately, he said no in this live Q&A that he undertook yesterday at the Economic Club of Chicago. So not a great development in that way. Now at the close, what you can see is the final half hour or so, we rallied. A lot of short covering, I would assume, because the commonality here is, of course, some bearishness when Fed Chair Powell speaks, some general selling in the broad market when the president speaks. That's pretty consistent. So some short covering at the end. But today's open right at the pivot looks like we're losing the pivot as we speak on the S&P 500. So we've got some things to keep in mind, obviously, as it relates to policy, Fed decisioning, so on and so forth. But the overall narrative at this time still plays to uncertainty. And I think we all know how uncertainty commonly is digested by market participants. So please keep all of that in mind as you all are looking for reasons to deploy money or locations to deploy any new money. Okay, so there's your S&P 500. Let's look at the NASDAQ 100. We're basically flat, but everything, and again, I'm back to saying a lot of the same stuff here, so I apologize if I sound like a broken record, everybody, but the truth of the matter is, what we've seen in the S&P since our peak there in February is the same. This is what we've seen in the NASDAQ, a very clearly delineated downtrend working against the 20-day moving average in orange. Our rallies have been quickly sold in the NASDAQ 100. We traded yesterday once more through the low of our rally day here. So for some traders in the short run, that could be their indication that they have an opportunity for more bearishness from here. I drew in a line of potential support as an area that has been held now on the pullback. So yesterday's trading exceeded that, came back and closed above it. So you can see there's a very small ledge of support. We're hopeful that that maintains, but of course, we're in a delicate spot here, just like we were with the SPX, everybody, in the sense that we either reverse and get a rally, take out the 20-day, and then we can start talking about the 50-day up above, which seems like a ways off, everyone. You're looking at about 1,300 points from where we are, or excuse me, more like 1,700 points from where we are right now. If we were to get excitable rally through the 20-day and potentially test the 50-day. So you can see there's a lot of work to do on the NASDAQ 100 here. Let's look at the intra-period chart. Going to look a lot similar, getting a little bit of a bounce. This is a developing candle over the last 1.5 minutes here. But if you're looking for reasons for optimism, the fact that we are bouncing off of that 20-period exponential moving average on this 5-minute bars could be reason for a bit of optimism heading into the weekend. Reminder, of course, tomorrow is Good Friday. There is no market. Market will be fully closed tomorrow. Monday, we will be back at it normal time there. So standard hours beginning Monday and all the way through next week. So, but with us being with the market being closed tomorrow, Schwab coaching will not be live tomorrow. So it's a good opportunity if you were thinking about what are you going to do spending your day. I got two ideas for you. One of them is simply rely on the archives on the YouTube channel, obviously, and get caught up on some of the videos you wanted to get caught up on, things you might be looking to learn about. Certainly a good day to do that. Alternative two, just get out of the house, go play some golf. Something like that sounds great too. So give that some consideration on a down day. Or on an off day, I should say. Carol wanted to know about our percentages. Let's take a look. So our peak up here on the NASDAQ, let's draw to where we are last traded at 18,317, right about there. So let me make a little update here, show label in the middle. All right. So yeah, about 18% to where we are at this moment, Carol. But if I redraw that line to the low, as you see here, we got down about 25.5% on the on the NASDAQ 100. So definitely got into that excessive or that beyond 20% level. Nothing wrong with, utilizing that. Many of you more specifically, many investors will just simply rely on a percentage move off of peaks as a way to start deploying their other cash. There's nothing wrong with doing it that way, everybody. It just means you're probably a little less active in terms of monitoring the market day to day. Many of the investors out there who are simply taking advantage of a drawdown or pullback in the broader indices will just concern themselves with those percentages. At 25% down, I add 10% of cash as an example only. When we get down 30%, I add another 10%. If we get down 35, another 10%. Point being, they have a plan and they know how they want to deploy liquid funds to the market. They tend to do that when the market has pulled back, obviously. So hopefully that's helpful for you all and gives you something to consider if you are thinking about deploying funds. I mean, again, yes, we are down. It's unclear at this point whether our existing recent lows in the NDX, the SPX, or the Russell are going to be maintained. They are lows. The question is, are they the low of our pullbacks? It's way too early to know that. So yesterday, when I had Brent Moores on, we talked about the same thing in the Russell, our continuation of the downtrend, remaining below the 20-day moving average, remaining below a couple of key levels of former support, now potential, if not likely, resistance. The big hang up here was the 2000 level. We're about 125 points under that right now. We do have a declining RSI, so our relative strength index here has been validating the downtrend and gives plenty of reason for a lean towards continuation of the downtrend rather than a potential breakout of the downtrend. So we're not getting a whole lot of price action that would give you encouragement as it relates to the Russell and the small caps right here. Now, briefly, we're going to look, since we're talking small caps, let's look at the TNX and just see we've come back to an area of support. Now, we got a big spike here. We went from 3.9 all the way to 4.6 basically, and we have come back now back down to the 20-day moving average. Now, I'm going to pull back and eliminate this line. This downtrend line, could that be a spot where now we are going to be apt to get a bounce? It's too early to know, of course. But when you break a line of resistance, as that downtrend line could have been considered, you break that line, you take it out to the upside, you come back and retest. That might be what we're looking at right here. So, ideally, if you're a trader, traders want to see those yields coming down. Certainly, President Trump wants to see those yields coming down. He's would like to see the Fed taking some action here. And in this regard, the Fed not taking action and yields coming down organically through market action, that might be more helpful, but it remains to be seen if that's what we're going to get here. But it's an important level that we're sitting on, right around 4.25 or so here. Obviously, if we could get that lower back under the 200-day moving average, we'd see some shorter-term benefit from that. But right now, we're not getting it. Okay, next, let's hit up those semis. Same thing here, everybody. Nothing different. But yesterday, what did we do? We broke the uptrend line and we basically closed below it. So you have a bit of what, is a little indecisive hammer there yesterday. We finished above our open, admittedly, but it wasn't a wonderful level by any means, everyone, as you can see. So let's look at that on our 5-minute bars. And you can see that that line I drew in, that red line here, this horizontal red line, is basically a long-range support level. In fact, I'd have to add some additional time here to make this a two-year chart. So what was it? Look at that line. So everybody, we always talk about this. You all love to ask questions about, hey, does that line matter, or how is it that historical pricing matters? Well, just take away your standard, technical analysis concepts, everybody. What once was resistance can then become support when broke. Well, this was resistance, and it was, again, a little bit of resistance until it wasn't, right? Look at how we rallied through this level here and took it out, made a new high, and then technical analysis 101, we just talked about it. What happened? Broke resistance, resistance became support. We got thrown back for a test at resistance, former resistance, now support, and we then moved off of it. Well, that is the exact same red line that we were talking about right here. And now we remain below it, okay? So commonly you all ask such wonderful questions about, hey, should I be looking at this over my time frame, the time frame I'm trading, or should I be looking at it at the longer term time frame? And the real answer to that is yes, to both. Look at it over all instances, all time frames. They all matter. And we just need to determine which of those is really the driving trend at any given moment. We know that SOX, the semis, have been under pressure. They peaked in July, about 6-7 months ahead of the rest of the market, and have been struggling greater than everything else over the last 2-3 months once the tariffs have been hit. So the tariff conversation has come to the forefront. So there's plenty of concern. And if we get granular in nature, the more concerning aspect is the fact that we are now 2 days below the uptrend line, the former uptrend line. We are also at former resistance and failing there. And again, on a 5-minute bar, sure, we have gotten a little bit of a bounce right off that intraday pivot, but by no means out of the woods here. In fact, my red line as nice as I would, that could be, keep an eye on the absolute highs on the gap. So this level here at around 39.05 could also be a ledge. So maybe it's more like a zone of resistance in there, everybody. You really want to see the SOX clear that 3,900 with some conviction to the upside. That would give us something to be excited about. Unfortunately, the narrative could keep us under wraps, but let's see. We're not going to allow the narrative to necessarily dictate, but let's let price action to an extent dictate how we want to approach things here. So pretty important levels on the semis here as well. And then normally we wouldn't look at the Dow, but there's a big move there in the Dow today tied directly to what's going on with United Health, which we're going to look at momentarily. So I thought, let's go ahead and just point this out. The Dow 30 have clearly been struggling here, everybody. Now, much like we saw with the S&P, much like we saw with the NASDAQ 100, our rally back has come to the zone of resistance, 20-day moving average down sloping, former support, now potential resistance. I like to do that by changing my colors. You all see this, when I've got a line that I'm defining as resistance, I change it to red. If I think it's support, I change it back to green. This is a difficult spot for the industrials. This looks very standard, doesn't it, everybody? A fall, an immense move to the downside, big volatility, rally back to the 20-day, failure at the 20-day, and now trading below the low of our high day, the high day being this April 14th, and taking it out with some conviction yesterday. Today already trading through the low of yesterday. That looks like, for many traders, short term at least, continuation of the existing downtrend. So Dow Industrials staying negative here, unfortunately. And I say unfortunately because, we've got the transports. Now they're up today, but the conversation on the transports is leading the broad market to the downside. And the importance of that gets back to some of the basics of technical analysis and Dow Theory. So let me bring a chart over here. I'm just going to change this to my Dow Theory chart, and we'll just quickly look at those side by side. So what you've got is a breakdown over the long-term uptrend that was there in the Dow, the Dow transports, and the Dow Industrials haven't quite broken the same trend, but they are both working lower, right? So this stands out as one of those negatives. Now, Dow Theory's been around for about 150 years. It may not be as instructive today to incorporate Dow Industrial Average versus Dow Jones Transports. But the reason that it was so instructive initially is that we used to be an economy that produced, not just consumed. So these days, it's important to pay attention to the transports because that's how we move things around the country, obviously. That's your trucks, your rails, etc. But we did see that one of those companies, one of those truckers reported earnings this week, JB Hunt, and that was not a great report. So there's a lot happening that we can kind of pay attention to and monitor and can give us a little bit of insight and instruction here. Yes, the transports are up today, but ultimately we might be looking at a longer range developing situation whereby we start or continue making rather lower lows in the short run in both the transports and the industrial average. That could be problematic and could be a longer run signal of a shift to our trend. So plenty to keep an eye on here as well. Okay, Jay Richardson, no, the market is a standard day. We'll be finishing it up at 4 p.m. Eastern today, so more of the same there. Let's see. All right, so we just looked at basically all of our broad market stuff. We do have the VIX retreating a little bit today, but holding that 20-period moving average. We really want to see the VIX back under about 28.5. The VIX at this level is still elevated, everybody. We need to get beneath the 20-day to see this kind of move back to give us some lift in the S&P. Now, we are up 60 basis points here, 0.6% on the S&P 500, but the fact that the VIX has fallen as aggressively as it has, it's been cut in half, and the S&P 500 has been incapable of making a higher high in the short run, that stands out and could be a little bit concerning. So just a note to that extent, everybody. Let's see. Let's get into some individual stocks here this morning. So we talked yesterday about the negative impact of NVIDIA. NVIDIA had a huge impact on the market yesterday. So let's pull up NVIDIA. We'll take a look. We got basically a full doji day, right? I mean, look at the swing in the stock yesterday. Our range was 6. Is that right? Is that only 6 points? So about a 6% range. So $6.34 there, low to high. But we tried moving it around and just couldn't break one way or the other. So that tells us a little bit of indecision as it relates to NVIDIA here. Definitely had a pretty heavy weighting against the NASDAQ 100 and against the semiconductors as well. If we take a peek on this one, intraday, we are below the pivot. And you'll notice that our brief bounce may have already lost steam, everybody. So the fact is, we were above it, kind of a little bit, a little of, relief in yesterday, perhaps. Tried to get back above the 50-day this morning and hold. But once the market opened, it was more give back mode on NVIDIA. So it appears as though there is more, potentially more negativity relative to NVIDIA here. We're going to have to watch that one, unfortunately. And obviously, that's going to have a big impact on the overall markets. All right. Now, a couple of things we just have no option but to cover. Now, the big mover today is United Health. And I was looking for my headline, but I don't have a good headline. But let's look at UNH and see the significance of this one. Unfortunately, they're getting whacked today, and that's having a pretty outsized impact on the Dow 30. We're down about 19%, 110 points. Here it is. The headline reads that Medicare Advantage is an issue for United Health. We had a price target adjustment out of Piper Sandler, reducing their target down a little bit, very small, from 600 to 592. They maintain an overweight rating on the stock. Excuse me. But ultimately, not a great, well-received report. As you can see, there's a lot of support down below here in price action. But right now, you'd be hard-pressed to suggest that a bounce is coming. As we often say with selling, everybody, let the selling run its course before deciding that you need to be in a position. I think it's fair to suggest there is a bit of support down here. It's just unclear exactly where that support is going to run its course. As you can see, the height of my rectangle is not small. It's about a 25 to 30 point rectangle. That tells you that there could be, support could be anywhere in that zone. And this week's current candle does not look fantastic. If that's in fact what the United Health CEO suggested there, Jay, that calling these results unusual and unacceptable, that's not going to be well received by the market by any stretch. So can't say I'm surprised to see this bit of selling here, 19%, pretty substantial. But that is a big move. Again, if we're looking for reasons to step in, let the selling run its course before choosing to do so. You don't have to be the first trader through the door at 435. If 435 does not hold, downside could be significant. So don't be the first one through the door. Remember, you can be a good trader by missing the first 10% of a move and the last 10% of a move and capturing just that 80% sandwich in between. Utilizing confirmation to give you reasons to step in or confirmation to step out can be very helpful, everybody. Okay, so there's UNH. What about, we got to talk about Microsoft this morning, everybody. Microsoft got downgraded. Not exactly ideal. So let's talk a little bit about that. So KeyBank analysts downgrading Microsoft to sector weight from overweight. They did not assign a price target. Okay. The firm's Microsoft-specific reseller survey said their results were soft, with the company's strategic importance dropping 4 points on a quarter-over-quarter basis, while its conversations have been largely mixed, with an increased focus around artificial intelligence monetization and their CapEx flexibility. Long-term expectations for workloads to be deployed in the cloud were a negative read, according to the analysts, and that's now at 48%, which is down from when it was at 56% in the survey. So that stands out. You're seeing some shifts in the underlying balance sheet for Microsoft, and price action is kind of validating such things, everybody. In fact, if we were looking at this before getting this information, well, price action's been telling us something along the way, hasn't it? Let's look at what we've got working here. I'm going to have to activate my former support, draw this out a little further, edit that and make it a red line for obvious reasons. We are below it. We thought we might have had a potential breakout. It did not occur. So what have we been doing all the while? Making lower highs, everybody. New band of resistance at 387 or so on Microsoft. If we drill into the move we've made just this year, is there anything that's been going on here, everybody, in Microsoft, in the chart specifically, that just kind of lets you know that the trend isn't working yet? Well, again, when you're feeling uneasy or you're feeling uncertain, fall back on your simple, basic technical analysis rules. What do we need for an uptrend? We need a higher high. Did we get a higher high anytime along here, everybody? I mean, we've fallen pretty well. That last earnings report back here in January, we got a significant gap lower, and then we've stayed below the 20-day. Yeah, but you'll say, Kev, we were above the 20-day here, and we were even above it for 4 days, and you're right. But you'll notice, look at where the highs were before that. Draw that in here, right about here. So that means that we, in order to have said, yeah, we've got a legitimate or a confirmed break above resistance, we would have had to trade all the way up over and through 402 probably on a close. Didn't get it, right? So we were above the 20-day, but we're briefly or quickly back below it. And what do we say about the downtrends along the way? Well, we often see these patterns play out on a consistent basis. So here you had a bit of a bear flag. I can draw this in, right? You can see it. Nice little up channel. Oh, we were fine. There's nothing to see here. We pushed from 377 up to 401. We added 24 points rather quickly, a nice 6-7% move. Might have been feeling good, but don't allow short-term change in price to dictate your overall feel. Pay attention to the longer range trend. It matters. And the fact was, lower high led us to think that there's a better chance of a breakdown than a breakout until we could trade above it. Couldn't trade above it. And then we got back below it, made a lower low, down all the way down here. And then we rallied. And what did we do yet again, everybody? Lower high in price. Failed against the 50-day moving average. Sure, we got through the 20, but that was short-lived, wasn't it? I mean, it's pretty clear that we can break these moving averages for a very brief window and still not be in a new trend. So here we are, back below the 20-day on Microsoft, working our way lower today. What do we want to hold today? Well, I think a lot of traders are probably looking at the lows we set yesterday. Moves under here are not going to be well received on Microsoft and could easily push us to the bottom. So that is going to be important to monitor. Let's see. Yep, that's one of Barb's best ones, right? History doesn't repeat itself, but it often will rhyme. Yes. I know a lot of us have that one. That one stays in my Rolodex. I spit that one out periodically because it is common. We definitely see a lot of rhyming in the market, that's for sure. Let's see. Yeah, continuous chop maybe there, Lakshmi. You might be right. Let's look at this one for you on a weekly chart just to revisit. Boy, that stands out from the trend side, doesn't it, everybody? The fact is that we are below that 100-week moving average. You've got the rolling over of your faster 20 and 40-week moving average. So what we could say, if nothing else, we could look at the weekly and suggest that we know the level above which we need to trade to suggest that our trend that's been in place is back in place. And we just don't see that right yet, do we? So maybe some defensive action as it relates to Microsoft, maybe a trade opportunity here if you were feeling bearish and you were giving consideration there. We might examine that here in a moment. All right, what else? How about something a little bit better in terms of the news, at least? We had a couple of upgrades, so let's look at one of them is Intuit. So we just got through tax season, thankfully. Intuit got an upgrade from Scotiabank to outperform from sector perform. Let me add a little time to this chart. Now, this is going to be, I'm bringing this up, but I'll admit, boy, this is a difficult chart to get a grasp on here, everybody. Looks like we've basically retreated and taken us all the way back to November of 2023 levels. That's what we've tested here, at least. There you go. So I'll make that green in the hopes that it stays held. Certainly Scotiabank's hoping it stays held after giving an upgrade. So outperform from sector perform. New target on this one at 700. That's up from 600. While the IRS direct file program shutting down looks increasingly likely, Intuit has been heads down on disrupting the $35 billion assisted tax market through local search and timely marketing, as well as AI-powered full service, according to Scotiabank. So this is why they are giving the upgrade. The stock has been the top performer in the analyst coverage dating back to February 18, which is when the biggest of the drawdowns in the broad market has begun. So they're looking at this from a bit of a relative strength standpoint as well. So that was a one I wanted to hit on for you. And then we also had Bank of America. Phillips Securities upgrading Bank of America to buy from Accumulate. New target here at 45. That is a reduced price target from 50, by the way. The firm cites recent share performance for the upgrade. I'll admittedly suggest that that seems a little bit short-sighted, especially when I look at Bank America in terms of the chart. I mean, this is not a fantastic looking chart. You've got a lot of overhanging resistance. In fact, rather than eliminating those lines one at a time, let's just clear the draw set because this is standing out here. What do we got? We've got, some potential support in this area. Long range, of course. We've already tested it. Potential resistance at the 20. Again, what? Man, I swear I sound like a broken record because we've seen so many of these patterns playing out. It is fine and comfortable to see this consistency, but not so much in a bearish standpoint. I'd much rather see this consistency in a bullish standpoint, of course. So this stands out to me. But hey, look, if you're talking about it from a trend standpoint, everybody, we got to see bullishness has to occur over 39, and then we can start talking about an opportunity. Right now, you'd be setting up a long side or bullish trade with tight support to yesterday's low. That's only risking about 60 to 70 cents, but it also only has upside to about 39, so maybe $1.50. So your risk reward's a little bit inverted. You're below the 20-day moving average, below major resistance. This one stands out as potentially remaining in the bear trend here, more so than, say, ready for a reversal. So I thought that stood out as well, regardless of the upgrade. All right, couple more here for you. Upgrade City. How about MongoDB getting an upgrade today? Now, this, as you can see, if you ever wondered how to look at a trend, look at a chart real fast and see where we are or how we're doing, the first thing you could look at is, are we in the upper left corner or the lower left when we began? Unfortunately, we were in the upper left and now we reside in the lower right. That's the opposite of what we want. We want to start in the lower left and reside in the upper right. And so what we've got here is clearly a downtrend that's been pretty aggressive on MongoDB. But Redburn Atlantic upgrading Mongo today to neutral from sell. New price target at 170. That again is an adjusted lower target though from 180. The firm sees no further downside in the shares. Boy, how about that for a comforting comment? No further downside, nothing else to worry about. you can feel comfortable. And obviously, I'm being somewhat glib. I apologize, but that's according to the note here. MongoDB's valuation multiple is trading near its all-time lows, and earning expectations have already been reset, according to the analyst in their research note. So they do admit, Redburn that is, that macro-related earnings risks remain. They're not company-specific, and that its structural concerns about MongoDB's weakening competitive position are now largely priced into the stock at this level. I thought that was a pretty intriguing comment that differs from maybe what you get consistently from some of these analysts. But as always, I got to remind us, we know that no price target or upgrade is absolutely going to play out the way that the analysts want to see it. If we were going to evaluate from any risk reward opportunity, I could see a potential here to rally into the zone from which we have fallen. So that could potentially be 215. I mean, we're talking opportunistic, right? I mean, price at under 160, potential for a 50+ point move would be amazing. But we're also looking at it from the trend standpoint, everyone, and we're below the 20-day, have been since February 19 or so. That date rings a bell, doesn't it? So again, watching the same stuff. If you're bullish, you're taking a position right now, you might not be in the best setup, right? I mean, it kind of looks like a bit of a bull flag, but I think if you're a trader that's looking to put probabilities in their favor, they would prefer to see us trading over the 20-day on a close. Here, this ledge makes a lot of sense for many traders. Now, that's what is that, about 13 points away? So yeah, you're basically asking the stock to move 13 points to the upside to then give you the comfort to step in. This is what I'm talking about in terms of thinking about cutting off the first 10% and the back half 10% as well. You don't need to be the first trader into the trade. You just need to participate when the trend is moving in your favor. And for many traders, that will begin on a close over the 20-day moving average. All right. Wow. Yeah, that one's intriguing. So, if you were going to look for examples, one example could be the MongoDB trade on a move through the 20-day moving average to the upside. You could set up a bullish opportunity there. But I thought, giving the Microsoft look today, we could potentially look at a downside. If you were thinking bearishly, you could consider, from an example standpoint, a long put vertical situation whereby you own a put to the down, or excuse me, own a put to the downside, right? Expecting Microsoft to go lower in this scenario, and then selling a put lower as your protection. Protection being just admitting, hey, this is what I'm looking to take from this trade. You can put yourself in a risk-defined situation, everybody, which is one of the things that a lot of traders like about trading options. And it seems like, we're just not going to have the opportunity from a time frame wise to get to that for you here today. But allow me to take a quick peek at our calendar for the day. And I'm positive we've got some option content coming, because that's what we do here on the Trader Talks channel. So today, up next, as it turns out, we've got long verticals and diagonals, and that's hosted by Cameron May, and that's coming up at 11 a.m. Eastern. So that might be one to check out. Additionally, we're going to be hearing from Connie a little later today, 2 p.m. Eastern time. She's teaching short verticals. That could be another good one if you're looking for some option discussion and opportunities for consideration given the market here today. But I did run out of time, unfortunately, so we won't have an opportunity for an example trade. But I hope that the conversation nonetheless was a helpful one. A quick revisit on where we stand here intraday, everybody. I'm going to pull that S&P 500 back up. You'll notice we are right back to the pivot. So what have we done today? Well, we've tried to get ourselves in gear, have been incapable of pushing through 5,300 on the SPX. That stands out. Keep an eye on 5,300 as potential short-term resistance there. The NASDAQ 100 back at the pivot as well. We would like to see us hold the pivot, not below it. That stands out here. Let's see, the semis are also sitting on the pivot. As you can see, there remains a bear a bear umbrella over the market here, everybody. Be aware and take into account the fact that we've got a long weekend ahead of us. We'll see the appetite for comfort maintaining longs into the weekend coming over the next couple of hours. It's going to be worth watching and keeping an eye on, everyone. So with that, I'll wrap it up. Big thanks to Barb in the chat, obviously, and a big thanks to all of you for being here and participating in the segment. I love the Thursday show because it enables me the chance to get to more of your commentary, of course, but glad you are all here today. The next Trader Talk will be on Monday at market open, 9:30 a.m. Eastern, and I will be here with one of my regional investment strategists. Actually, I will not. I will be here with my man, Ray Kimbrell, is going to be joining me. He's one of our events coordinators as well. So if you've been to one of those face-to-face in-person events, you've met Ray. He's going to be joining me on Monday, and I'm looking forward to having him. So with that, I'll wrap it up. Thanks for being here. Follow Barb and me on X. Hit that thumbs up button down below if you don't mind. If you like today's discussion, everybody, I appreciate it. Hope you all have a fantastic Thursday, and I look forward to seeing you all again real soon.